Greetings, fellow financial adventurers. Welcome to our channel Snap Savings, your fortress of financial wisdom.
Real estate has long been hailed as one of the most reliable paths to building wealth. It offers a unique combination of appreciation potential, cash flow generation, and tax advantages. Investing in real estate is more than just buying properties. It's about securing your financial future. One of the primary reasons real estate investment is so appealing is its potential for long-term appreciation. Historically, real estate values have tended to increase over time, outpacing inflation and providing investors with a hedge against economic downturns. As populations grow and urban areas expand, the demand for housing and commercial spaces continues to rise, driving up property values. In addition to appreciation, real estate investments offer the potential for regular cash flow through rental income. By owning rental properties, investors can generate a steady stream of passive income, providing financial security. Moreover, real estate investments come with several tax advantages that can significantly enhance returns. Before diving into the real estate market, it's crucial to establish clear and defined investment goals. Having a well-articulated investment strategy will guide your decision-making process. Whether you're aiming for long-term wealth accumulation, passive income generation, or portfolio diversification, defining your goals is the first step. Start by considering your investment timeline. Are you looking for short-term gains or long-term appreciation? Short-term investments, such as flipping properties, can generate quick profits but come with higher risks. Long-term investments, such as rental properties, offer steady cash flow and appreciation potential but require a longer commitment. Determining your investment horizon will help you narrow down your options. Next, assess your risk tolerance. Real estate investments, like any investment, carry inherent risks. Market fluctuations, economic downturns, and unexpected property expenses can impact returns. It's essential to understand your risk appetite and choose investment strategies that align with your comfort level. Quantify your financial goals to provide measurable benchmarks to track your progress and make informed decisions. The real estate market is dynamic and constantly evolving, influenced by factors such as interest rates, economic conditions, population growth, and government policies. Before making any investment decisions, it's imperative to develop a thorough understanding of the real estate market dynamics in your target area. This involves conducting comprehensive market research, analyzing trends, and identifying potential opportunities and risks. One crucial aspect of market analysis is understanding supply and demand dynamics. A balanced real estate market occurs when the supply of properties for sale or rent aligns with the demand from buyers or renters. When demand outpaces supply, it creates a seller's market, driving up prices. Conversely, when supply exceeds demand, it results in a buyer's market, leading to lower prices. Another critical factor to consider is the overall economic health of your target area. Factors such as job growth, income levels, and industry diversification can significantly impact the demand for real estate. The world of real estate investing offers a diverse array of strategies, each with its own set of risks and rewards. Choosing the right investment strategy is paramount to your success. From traditional buy-and-hold rentals to more hands-off approaches like REITs, let's explore the various real estate investment strategies available to beginners. One of the most popular and time-tested strategies is buy-and-hold rental properties. This strategy involves purchasing properties with the intention of renting them out to tenants for long-term cash flow. Buy-and-hold investors benefit from rental income, property appreciation, and tax advantages. This strategy requires a significant upfront investment and involves the responsibilities of being a landlord. Another strategy gaining popularity is house flipping. This short-term investment approach involves purchasing undervalued properties, renovating them, and then selling them for a profit. For investors seeking a more passive approach, real estate investment trusts, REITs, offer a viable option. By investing in REITs, individuals can gain exposure to the real estate market without the hassles of property management. Before embarking on your real estate investing journey, it's crucial to establish a solid financial footing. This involves assessing your current financial situation, securing financing, and building a financial cushion to weather any unexpected storms. Begin by reviewing your credit report and credit score. Your creditworthiness plays a vital role in securing financing for real estate investments. Lenders rely heavily on your credit history to assess your ability to repay loans. A higher credit score will qualify you for lower interest rates, saving you thousands of dollars over the life of your mortgage. Next, create a comprehensive budget that tracks your income and expenses. Identify areas where you can cut back on unnecessary spending and allocate more funds towards your investment goals. Having a clear understanding of your cash flow will help you determine how much you can comfortably afford to invest in real estate. Furthermore, build an emergency fund to cover unexpected expenses. Having an emergency fund will provide you with a financial safety net, allowing you to weather any storms without derailing your investment plans. Finding the right property is paramount to your real estate investing success. It's not just about finding a property that looks good in pictures, it's about identifying properties that align with your investment goals, financial capabilities, and risk tolerance. This involves conducting thorough research, networking with real estate professionals, and diligently analyzing potential deals. Start by defining your investment criteria. What type of property are you looking for? Are you targeting single-family homes, multifamily units, commercial properties, or land? What is your budget range? What are your desired returns? Once you have a clear understanding of your investment criteria, start your property search. Utilize online real estate portals, connect with local real estate agents, and attend property auctions to explore available properties. When evaluating potential properties, conduct thorough due diligence. Securing the right financing can significantly impact your returns and overall investment success. From traditional mortgages to creative financing options, understanding the various financing avenues available is essential for maximizing your investment potential. Traditional mortgages are often the go-to option for financing real estate investments. These loans are secured by the property itself, meaning the lender can foreclose on the property if you default on your payments. Mortgage rates and terms can vary widely depending on your creditworthiness, the type of property, and the lender. For investors seeking alternative financing options, hard money loans and private loans offer potential solutions. Hard money loans are short-term, high-interest loans typically offered by private lenders. These loans are asset-based, meaning the lender is more concerned with the value of the property than your credit score. Private loans, often sourced from friends, family, or private investors, can provide more flexible terms and faster funding than traditional lenders. Another financing option to consider is seller financing. Once you've acquired your investment property, the real work begins. Property management. Effective property management is crucial for maximizing your returns, minimizing vacancies, and ensuring the long-term success of your investments. One of the most critical aspects of property management is tenant screening. Finding reliable, responsible tenants is crucial for protecting your investment and minimizing potential headaches. Thoroughly screen potential tenants by checking their credit history, rental history, and employment verification. Regular property maintenance is another essential aspect of property management. Routine maintenance, such as landscaping, cleaning, and minor repairs, can prevent small problems from escalating into costly issues. Consider hiring a property manager if you don't have the time, expertise, or desire to handle the day-to-day operations of your rental properties. Hiring a professional property manager can free up your time, reduce stress, and provide you with peace of mind. Real estate investments come with a unique set of tax implications that can significantly impact your returns. Understanding the tax benefits and deductions available to real estate investors can help you minimize your tax liability and maximize your profits. One of the most significant tax advantages of real estate investing is depreciation. Depreciation allows you to deduct a portion of the property's value each year over its useful life, reducing your taxable income. Another valuable tax deduction for real estate investors is mortgage interest. You can deduct the interest paid on your mortgage from your taxable income, further reducing your tax liability. When you eventually sell your investment property, you'll need to consider capital gains taxes. The good news is that long-term capital gains, defined as gains on assets held for more than 1 year, are taxed at a lower rate than ordinary income. While real estate investments offer significant profit potential, they also come with inherent risks. Market fluctuations, economic downturns, property damage, and tenant issues are just a few of the challenges real estate investors may face. Understanding and mitigating these risks is crucial for protecting your investment and ensuring long-term success. One of the most effective ways to mitigate risk is through thorough due diligence. Before purchasing a property, conduct comprehensive research, inspect the property for any potential issues, and analyze the financials to assess its profitability. Another crucial risk mitigation strategy is diversification. Diversifying your real estate portfolio involves investing in different types of properties, in various locations, and across different market cycles. Insurance plays a vital role in protecting your real estate investments. Taking the first step towards real estate investing can feel daunting, but it doesn't have to be an overwhelming experience. With the right knowledge, preparation, and mindset, anyone can embark on a successful real estate investing journey. Here are some practical tips to get you started. 1. Educate yourself. Knowledge is power, especially in the world of real estate investing. Invest time in learning about different investment strategies, market analysis, financing options, and property management. Read books, attend seminars, and connect with experienced investors to gain valuable insights. 2. Start small. You don't need to purchase a multi-million-dollar apartment complex right out of the gate. Start with a smaller, more manageable investment such as a single-family home or a duplex. This will allow you to gain experience, build confidence, and minimize your risk.
Don't forget to like, share, and subscribe for more profound insights into mastering your financial journey.